Hello everyone. Good morning, and how are you doing today? Trust you had a good night rest. Excited to welcome you to another promising edition of our Forex Morning Mastery as we prepare for the second half of the week. And it's been a wonderful week so far. Remember, we have been monitoring the USOILSPOT, which gave us some selling opportunities on Monday. The USDJPY also gave us some, is it sell or buy opportunity? I can't remember, but we'll go into that. And of course, the XAUUSD gave us over 200 pips move before the decline started yesterday. So we are going to be deliberating on all of this. If you're a fan of any of these assets, you do want to stay tuned in as we prepare for the second half of the week. And for those who are joining me for the first time, you're highly welcome. My own name is Sheriff Daramola, and this is the Forex Morning Mastery, which we run 3 times in a week: Mondays, Wednesdays, and Fridays. 9:30 a.m. West African time, 8:30 a.m. UTC. So I'm very excited to have you join us this morning, and feel free to engage in the comment section as the session evolves. Ask me anything that comes up on your mind, or you need some clarifications as regards to our decision. So as always, the first thing we are going to be doing is to delve into the US dollar market dynamic. Since we are monitoring the Japanese yen, the US crude oil, and of course the gold commodity, it's important that we keep abreast with what is going on in the US dollar market. And looking at your screen right now is the DXY. And for those of you who are part of our session on Monday, I did emphasize that the US dollar grew significantly prior to the NFP report last week. We had a very robust US economy prior to last week. Then we also had some hawkish remarks from the Fed official, which further helped the dollar to rise into that area above the $100 mark. But on Friday, the disappointing NFP report removed the shock behind the momentum, and we saw price massively dropped back into that area between the $99 level and the $98.65 level. And on Monday, I went on to emphasize that, considering the fact that we are at the beginning of the month, we may likely see extended sideways trading activity. Remember, I said structures are still forming. Investors are still testing waters to understand what is going on. And I did mention that this area between the $99 level and the $98.65 area is going to be the determinant factor for this week. And look at what has been going on here. Price has been consolidating, and you know what that means. When price action remains confined within a range bound, it emphasizes the prevailing uncertainty at this point in time. And you know how we use our range bound structures. Of course, we wait patiently to see how the market will play out. Will it break out of the structure to give us buying ideas, or are we going to see price break down the structure to incite selling opportunities? So for me, we are at a crucial juncture, waiting for figures to support the to give us an insight of where price is likely going. Now, if you would ask me right now, the dominant force shaping the US dollar is the growing expectation of a Fed rate cut in September. Now, what is driving that sentiment? Well, from the reports we've been getting since last week, especially from the NFP, we saw a massive drop below what market participants were expecting. And of course, we saw soft US data on Tuesday, one of the major events we were looking forward to, which is the ISM Services PMI, which dropped to 50.1, as you can see here, below the market expectation of 51.5, and of course below what came out in the previous month. And this is deepening concerns about economic momentum, keeping the dollar soft across board. Now, going into today's trading session, we do not have any high impactful event from the US economic calendar. So instead, market participants will be looking forward to speeches from Fed officials to decide whether they will hold on to the US dollar or not. So we're looking forward to Collins, Cook, Daly much more later today. That's about 6 p.m. UTC. That's 7 p.m. local time, 7 p.m., 8 p.m. Respectively today. So we want to be dialing in to see what the major narrative is as regards to their speeches. Then tomorrow, market will be looking forward to the initial jobless claim count, which obviously is a labor-oriented data. We had the NFP last week. Will this reflect the same scenario the NFP gave us, or will it deviate from that? This is one thing market participants will be looking forward to. So with that said here, let's transition into the crude oil market. And of course, from what we've been seeing, hold on a second, let's load up that chart. So the first asset we are taking on this morning is the US crude oil, right? And on the US crude oil, we begin to notice a rebound in price, right? And let's first of all talk about the technical structure we marked out at the beginning of the week. Now, we went on to talk, this is the 4 hours time frame, mind you, and we went on to talk about how in the last 6-7 weeks, the price had remained confined within a range, the $70 level, and of course the $64 area. And I went on to emphasize how this area around the 64 and 65 level had remained a robust demand zone. Then we went on to say how price broke out of that descending trend line and the possibility of price coming back, retesting that trend line, which interestingly lines up with our support line to incite a massive move to the upside. And look at what has been going on here since the beginning of the week. We saw price drop into the structure, right? And the last 24 hours showed us that sellers were finding it difficult to break through that area, giving us something that looks more like a rebound in structure to incite a potential move to the upside. And from the fundamentals, or let me say from the scenarios behind the scene, oil appears to be staging a short-term bounce thanks to supply concerns like India possibly cutting Russian oil imports over US tariff pressure. Donald Trump said yesterday that within 24 hours that if India continued to buy Russian oil, that they would slap them with a massive tariff, with massive tariff sanctions or something like that. And this is a major concern. And if this goes on, we may likely see disruption in oil supply in the global market. It could lead to scarcity, and of course, this could incite price of oil. Then yesterday we also saw a larger than expected 4.2 million barrels drawdown in UX stockpile. Now, what does that mean? It means that demand has increased. So when there is a drawdown in stockpile, it means that they had to, the demand, the supply in the market was not enough to meet the demand. So they had to go into the stockpile to draw crude oil to fit the demand in the market. Now, this for me are very interesting factors that may likely incite price of crude oil to the upside. Now, with that said here, and with continued buy pressure around that as descending trend line, I had no other choice than to place a buy this morning. And as you can see at the bottom of your screen, I already have a buy position triggered around the $65.18 level, which is currently running with about 20 pips. Now, let's quickly look at what guided my decision today. Or first of all, let's look at what happened on Monday. So this was the structure we were looking at on Monday. Remember, we had the range bound structure, right? And we saw price confined within the $66.50 and the $66.90 level. Though price broke out of the resistance line prior to the beginning of our live session, but we went on to say that this engulfing bearish candle was a significant signal that projects that sellers may likely take over the market. And we went on to say that we want to wait to see if price will come back, retest structure, then we will join the decline. And that was exactly what happened. And we saw price moved over 160 pips before buyers begin to show signs of recovery. So we started the week very good, right? And for those of us who capitalized on this opportunity, well done and kudos to you. Now, going into today's trading session, it is quite clear that sellers are not finding it easy to break through the $65 area, $65-$64 zone comfortably, which for me could be a sign that sentiment is already pricing in supply concerns. And as a result of this, I had a structure identified on the 15 minutes time frame. So look at what I have here, an ascending trend line price since yesterday evening had consistently found higher highs and higher lows. And of course, going into today's trading session, this trend line here is going to be guiding my decisions. So as long as price remains above this ascending trend line, I will maintain a bullish bias. So as a result, I have bought, and let's see how the market will play out. Now, for those of us who in any way must have missed out on this buy position and you're planning to join this move, well, I will advise that you exercise patience and let's wait to see if price will come back into the trend line to incite that uptrend continuation. That's, I think, one of the scenarios we will be looking forward to. Now, considering the fact that it is not all the time that price does that, right? It's not all the time that price comes back to retest structure. The other scenario is if price evolves into an uptrend continuation pattern, maybe a pennant, a flag pattern, where the breakout of the resistance line of the pattern will give us that signal we are looking forward to. And as it is right now, we have price finding resistance around the $65.50 level, and this has been ongoing for the last 30 minutes. So are we going to see price break out of the structure? Well, if it does, it could welcome more buying ideas. So for me, what I'm going to do right now is place another buy stop order above the structure, and of course move my stop loss on the previous buy position to break even. So I do want to maximize this move if sentiment continue to lean towards concerns over oil disruption, oil supply disruption. So I've placed another buy stop order above the $65.50 level. So if you're keen on joining me on this one, you are open to it. So place the buy stop order there, and of course I will be moving my stop loss on the first buy position to break even. So let me do that right now. So we have okay, I think right here is okay. So I've moved my stop loss on the first buy position to break even, and it appears the second buy position has already triggered. So let's see how the market is going to play out from this particular area. So in summary, I'm holding on to a bullish bias right now, a temporary rebound in oil prices, and let's continue to watch how the sentiment evolve. Now, considering selling at this juncture will not be reasonable for me, considering what we saw on that 4 hours time frame. Let me show you once again so you can see what I'm talking about here. So I told you earlier that we are right within a demand zone on the 4 hours time frame. Price appears to be retesting that descending trend line we marked out at the beginning of the week. So this may likely push price into that resistance line. So this is one, and if I want to consider selling here, I would rather want to see price drop below the descending trend line and that demand zone to incite a sell-off. So going back into the 15 minutes time frame, you would agree with me that we are not in that area to consider selling at this point in time. In fact, if we at any point want to even consider selling, we will need this ascending trend line at the $65 level to be breached and broken to the downside, which is not yet happening at this point in time. So for me, buying is still looking reasonable, and as soon as price moves about 20-30 pips in our favor, let's ensure to move stop losses and secure the positions accordingly, right? So that is my view on the US crude oil going into today's trading session. So if you have any questions, feel free to let me know in the comment section. I will take about 5-10 seconds off. Let's see if there are any questions before we move on to the next asset on our watch list. So the second buy position has triggered already. Let's see how far this is going to go. All right. So in the absence of no questions, I want to assume that we are all on the same page, right? Let's see how this is going to play out. Like I did say, that ascending trend line will be guiding our decisions today. So as long as price remains, there's still a chance that price could come back into the structure, maybe take us out of that second buy position, come back, and then rally again. So the fact that price still remains above the ascending trend line makes it reasonable to keep on holding on to a bullish bias. So I wish us all the best of luck here on the US crude oil. So moving on to the next asset on our watch list. So the next asset we are looking at this morning is the USDJPY. And of course, I already have a buy position running on that asset. Look at the bottom of your screen, you will see it. And the USDJPY right now is caught in a crossfire, I will say. On one hand, we have a soft US dollar and rate cut bet, which is weighing on on this particular asset. We can see since the beginning of the week, price is not really moving in any direction. You can see it has been confined within that same range bound structure that we identified on Monday, that is between the 147.910 and the 147.050, just within that within the auspices of the key level we identified at the 147.5. So it really tells us that we have the appropriate key level guiding our decisions for this week. So with the way things are going, like I did say, on one hand, we have a soft dollar and rate cut expectation, which is weighing on the US dollar. And on the other hand, the yen is struggling too, pressured by weak real wages, Bank of Japan caution, and of course, political uncertainty in Japan. Now, let's look at the economic calendar. We had some not too good figures from the Japanese economic docket. Yesterday, we saw the labor cash earning coming in at 2.5%, lower than market had expected. And we also had wages report. I'm not sure why FX Street is not showing it here, which also showed that the economy is struggling. Then if we add this to the fact that the ruling party lost their election a couple of weeks ago, the uncertainty around the monetary policy of the fiscal policy of the incoming government is still not very clear. So this creates a kind of tug of war with no clear dominant force. Now, this is a perfect situation for short-term opportunity of intraday structure. So with the way things are going right now, considering what has been going on since the beginning of the week, the fact that sellers cannot drop significantly to the downside below the key level, and the second reality check here is price remains above the descending trend line. Let me show you what that was looking like on the 4 hours time frame. So this was a structure we marked out on the 4 hours time frame, right? Considering the price since the beginning of July, we have a descending trend line. This is the major structure I am using, and we saw price break out of the structure last week, and following the NFP we saw price return into the structure, and ever since it came back we can see sellers are finding it difficult to break down. Price is doing a consolidation, showing us signs that we may likely see the retest of this structure that will incite the next wave of bullish momentum. So from a technical and fundamental perspective, it appears that the USDJPY is on the verge of a second leg that started last week. So as a result, I had a buy position triggered, which is currently running in profit of about 15 pips thereabout, and I think this may likely continue. And even though the US dollar is struggling at this point, the fact that the yen does not have any fundamental factor that could boost it may give the dollar a room to rise from here. So guiding my decision for today's trading session, I have a structure here on the 15 minutes time frame which reflects the current sentiment in the market. So after the massive downtrend, we can see price has been consolidating, and in fact we have something that looks like a pennant right now. Price, if we zoom into the structure here, you will see that price had broken out of that resistant line of that structure, as you can see here. So for those of you who might have missed out on that breakout, well, you could still join right now if you can afford a stop loss of about 35 to 40 pips, because we do want to have our stop loss below this 147.500 area. And why is that so? Well, because if we that is where this new ascending trend line is, and we do want to have our stop loss below it to give enough breathing space for price action to move around. Now, if you can afford that, you can place a buy right away. But if you can't, well, if you're a cautious trader, you want to wait and see price maybe come back to retest this trend line or the resistant line of that pattern, where you will have a much more lesser stop loss, hereby increasing your risk to reward ratio on that uptrend possibility. So that is what I'm looking out for today on the USDJPY. Maintain a bullish bias, banking on the fact that the Japanese economy does not have a significant catalyst to push the yen up. Now, in as much as we maintain that perspective, you know how we do it in this community. We always try to be grounded in our approach. We do want to ensure that even though we are looking at the possibility of buying, the market can change. And if it does change, are we ready to capitalize on that direction? So if we are going to consider selling the USDJPY today, we definitely want to see price break down this ascending trend line. So if price can break down the ascending trend line, then that will be a good sign for us to consider selling. And to do this, we have to look below the 147.500 area. A breakdown retest could be all we need to prepare selling ideas. So that is what I'm looking at on the USDJPY for today. All right. So I hope I made myself very clear. It's not complicated, a very simple trading setup. Let's see how the market evolves from here. If you have any questions whatsoever, feel free to let me know in the comment section. So let's take about 5 seconds off. Let's see if there are any questions before we move on to the final asset on our watch list. Stay tuned in. All right. So we want to move on right now since there are no questions. Hope you've marked out the structures accordingly. And let's delve into the final assets on our watch list. Stay tuned in. So the final asset on my watch list for this week is my favorite, of course, and that is the XAUUSD, popularly known as the gold spot, right? And well, right now the US dollar appears to be showing some resilience at the moment, but let's first of all talk about what happened at the beginning of the week, right? Before we go into that detail. So right here, we had the range bound structure, of course, on Monday. Price was confined within the 3,369 and the 3,345 level. And for those of you who were with me on Monday, remember I told you that I bought this price level above the 3,354. And I did mention that we should plan to buy the break of the 3,369, as you can see here. And for those of us who captured it earlier, we had price move over 270 pips in our favor. And for those of us who caught it here, we saw price moved over 160 pips before the bearish move happened. Now, in the last 36 hours, the market has declined a little bit. As you see, price dropped, though you know I don't trade on Tuesday, so I wasn't part of this market. But when I came in this morning, I began to notice that things are changing a little bit. So gold is currently weighed down by strong equity sentiment, but finds support from weak US data, rising Fed rate cut bets, and lingering trade tensions. Now, if we look at the structure we identified at the beginning of the week, that is the 4 hours time frame, look at what we saw here at the beginning of the week. For those of you who saw my video on gold, this is going to be familiar with you. You'll be familiar with the structure. So I shared this and said that price appeared to be transitioning into a potential descending channel after rising out of this demand zone. You can see we saw price break out of this descending trend line, just like what we saw on the USDJPY, and then it came back, retest structure last week following the NFP report, which sent price climbing all the way into the structure. And one of the things I said in my video, my weekend video on gold, is that price is gradually approaching a known supply zone, that area between the 3,370 and the 3,395. And I did mention that this is a major confluence here, where depending on how price reacts to the supply zone will determine whether we will be maintaining a bullish bias or getting ready to sell. In fact, if we want to consider buying, we will need price to break out of the 3,380, and that will line up with the resistant line of this potential descending channel we have here to confirm an uptrend scenario. Then I went on to say that if buyers find it difficult to break through the zone, that means that the supply zone is very strong, sellers are still very strong in the market, and this could incite a massive sell-off. And look at what has been going on here since the beginning of the week. Buyers are finding it difficult to break through that supply zone. As we can see, every attempt by buyers to break through has always been met with strong resistance from the sellers, pushing price back to the downside. Now, could this be a juncture where sellers will push price again back into the 3,280? And if you look at the distance between where price is right now and that level we are talking about over a 900 pips, which is quite massive. And of course, I do want to be part of that move if it finally happens. Now, in preparation for today's trading session, we have a new structure on the 15-minute time frame, which reflect how market participants are digesting the current fundamentals. Now, currently there is a positive equity sentiment. There's a risk on mood in global equity market. Everyone is buying the stocks right now, and generally this usually undermines demand for gold as a safe haven asset. Now, we also have the US trade tensions, which is supposed to support the gold at the moment. But what we are seeing here is quite different, as sentiment appears to be shifting to the downside. So the structure I'm using to navigate this market today is this. I already shared this. For those of you who are with me on both my Telegram and TradingView platform, you would have seen the setup. So I said in that commentary that we have a descending channel, right? When we connect the series of lower highs. So after price tested the 3,390, we saw lower highs, right? And then we saw lower lows. Now, with the structure here, you will see that that area around the 3,370 and the 3,366 level had been a demand zone. Now look at this here, a demand zone here, though wasn't strong. Price broke down here, but yesterday we saw that this area was the platform that sent price into the 3,390, and now price was here about 2-3 hours ago, as you can see here. Now I said we are at a crucial juncture, and if you saw my commentary this morning, I said we will be looking at a reversal setup here to continue the narrative to the upside, right? And if that is not the case, we will look out to sell if price breaks down, retest this particular structure, as you can see here. Now look at what has happened right now. Price has broke down the structure, and if you look at the bottom of your screen, you'll see that I already have a sell position triggered on the gold commodity. So if you want to join that journey with me, let's see how this is going to play out. Now if price continues to drop, I'm looking to add more sell below this particular structure because it appears sellers are beginning to gain traction, and I do want to be part of that massive move over 900 pips if you are willing to stay that long in this market. So I'll place another sell stop order below the structure to maximize the potential of that bearish move. So if you want to join me on that one, let's see how this is going to play out. Then stop loss will be somewhere around the 3,370 or 3,368, dovetailing to about 40 to 50 pips of stop loss on this particular one. Well, that's a very good risk reward ratio if we are talking of over 500 pips to catch on this particular one. So we have the sell stop order triggered already, and let's see how far this bearish momentum will go. If you are not the ambitious type, you can have your TP at the support line here, which is about 150 pips. That's the 3,350 level. So that is what I'm looking at on the gold commodity for today. If you have any questions whatsoever, feel free to let me know in the comment section. Now if I'm considering buying, I would rather want to see price climb back above the 3,370 before I want to consider buying, and then break out the 3,375 to add more buy positions to our existing trade. Hold on a second, please. That is basically what I am looking at on the gold commodity for today. So let's see how the market will play out here, and I wish us all the best of luck on this particular one. If you have questions, feel free to let me know in the comment section. I'll take about 5-10 seconds. Let's see if there are any before we round off on today's Forex Morning Mastery. All right. So in the absence of no questions, I want to assume that we are all on the same page, and it's on this note we have come to the end of today's Forex Morning Mastery. So let's see how the market will play out today. I want to wish us all the best of luck. And hopefully by Friday when we come here again, we will be on a massive positive side of our portfolio. So it's on this note, I want to wish us all the best of luck. Trade smart, trade consciously, and do have a wonderful, wonderful evening, everyone. Bye.